Today we're diving into something pretty cool. 3 stocks that are not only considered a bargain but also have a super strong buy recommendation. You know, sometimes those big name stocks can come with a hefty price tag, and while you can buy fractions of them, sometimes you're on the hunt for those budget-friendly options. You want to get in on the action before things really take off, right? Well, today, we've got your back. We're checking out a handful of companies with shares that won't break the bank, all under $10 each. But hey, don't let the lower price fool you. These stocks have a strong buy thumbs up from some serious analysts. We're using a nifty tool to find these gems, and it's showing us where the experts are pointing their fingers with confidence. Keep in mind though, these budget-friendly stocks might dance a bit more on the roller coaster of market ups and downs, so always remember to consider your own comfort level and goals. Let's see what these stocks have in store for us. Alright, let's dive into 3 AI stocks that won't cost you an arm and a leg. First up, we've got Custom Truck One Stop, trading at around 6.88 cents per share. These guys have been on a solid 8.5% climb this year and a 4.7% gain over the last 3 months. So, what's the deal with them? Well, Custom Truck is like the go-to place for all things commercial trucks and heavy equipment. They've got you covered from start to finish. Sales, rentals, customization, fixing stuff up, and even getting rid of old rigs. They cater to industries like construction, forestry, and more. They've been around for over 30 years, got a bunch of employees, and make around $1.5 billion in a year. Oh, and their latest earnings report. It was a winner, showing earnings double what folks expected. They also brought in over $450 million in revenue, with rental and equipment sales up from last year. They even boosted their earnings guidance for the year. Right now, the stock is labeled a strong buy by the experts, with a price target of 9.75. That's almost 42% higher than it's at now. One analyst from Citi just chimed in today, giving it a thumbs up with a $9 target. So, things are looking promising for Custom Truck One Stop. We've got another exciting pick on our list today. Applied Science Products, currently hanging out at $7.54 per share. Now, if you take a peek at their stock chart, you'll notice they were chilling around the $2 to $3 range for quite a while, and then, bam, they skyrocketed in May. And yep, we're about to unravel why that happened. So, what's Applied Science Products all about? They are also known as Applied Digital Designs, and they're the brains behind next-generation data centers across North America. These aren't your regular data centers. They are super optimized for heavy-duty stuff like AI, machine learning, graphics rendering, and Web 3.0. They are on a mission to make the digital world run smoother and faster. Now, the big leap in May happened because Applied Science Products dropped some major news bombs. They revealed their snazzy new AI cloud service had locked in its first major customer, scoring a deal that could rake in up to a whopping $180 million over 2 years. That's some serious cash flow. And they are not stopping there. They are teaming up with big players like Supermicro and Hewlett-Packard Enterprise to keep pushing their AI cloud services forward. Guess what? They are about to share their earnings report on July 24th, so keep an eye out for that. In their last report, they surprised folks by making a profit of 1 cent per share, which was even better than what analysts predicted. They hold in a cool $14 million in revenue. And Wall Street seems to be liking what they are seeing. 6 analysts are giving Applied Science Products a thumbs up, and they've got an average price target of over $13 per share. That's a potential rise of nearly 74% from where it's at now. The price predictions range from $56 all the way up to $135. A fresh rating just popped up today with a target of $16. This analyst thinks that with a couple of AI contracts in their pocket, a big chunk of their revenue could be coming from non-blockchain customers by 2024. All right, that's Applied Science Products for you. Let's keep the momentum going and check out our third awesome pick. Let's dive into another gem on our list. Crescent Point Energy, currently hanging out just above $7 per share. Now, let's take a ride on the stock roller coaster they've been on. In the past year, They've cruised up about 6%, but it's been a bit of a bumpy road. Lately, they've slipped down by almost 7% over the last few months. And guess what? They are not just any energy company, they are in the oil and gas game. Crescent Point Energy is all about hunting for that black gold. They explore, develop, and produce oil and gas properties. They are a big player in North America, especially in spots like Alberta, Saskatchewan, and North Dakota. They recently made a cool move by snatching up a company called Montney for a whopping $1.7 billion in cash. This wasn't just pocket change, it helped them grab hold of some prime oil and liquid-rich assets in Alberta. This deal is like adding a treasure trove of inventory to their list and boosted their cash flow game by around 20%. Now, here's the sweet part, they are also handing out dividends. Yep, 30 cents per share to be exact, giving you a tasty yield of over 4%. But wait, there's more. Their earnings report is just around the corner on July 26th, where the analysts will be keeping an eye out for earnings per share of 29 cents. It's a bit of a drop compared to last year, but let's see how they play their cards. And guess what Wall Street thinks about these guys? Well, they're giving them a solid thumbs up. 4 analysts have slapped the strong buy sticker on Crescent Point Energy. And those analysts are eyeing price targets that float above $11 per share. That's a potential jump of about 57% from where it's chilling now. The latest rating popped up just 3 days ago, coming in as a buy with a potential rise of 61%, even though the analyst trimmed the price target by a smidge. Other ratings range from 37% to a whopping 90% potential upside. There's a bunch of those 5-star analysts putting in their 2 cents. All right, we've laid out 3 under $10 stocks here, and guess what? They are all screaming buy, according to some top-tier analysts. But remember, folks, these videos aren't telling you to whip out your wallet and start buying. These cheaper stocks can sometimes dance a bit wild, so be sure to do your own research and homework before making any financial moves. Drop your thoughts down below. Which ones got your attention, and how do you see their potential?